Hey guys, welcome back to another video, and today I'm here to talk about a stock that I think is a very good buy right now and in a very interesting position. So if you guys do enjoy this video, be sure to smash that like button. Also subscribe to the channel. I really appreciate your guys' support. Let's get right into the video. So the stock that we are here to talk about today is none other than Cava. This is ticker symbol CAVA. It's just, the name of the company as well. We see that this stock is up 4.38% today. The past 3 months, they're down 23%. Year to date, they're down 54%. In the past year, they're down 63%. Very young stock. We see that they actually IPO'd in 2023 and they actually IPO'd for $42. So they're still up, but this stock was once trading at $150. So it's taken a very hard hit since then. We see Cava, what they do is they are a restaurant. If you guys know me, you know I like restaurants. I like investing in restaurants. I think that there is a lot of room for growth in these spaces, and this is a space that I know pretty well when it comes to investing. So Cava, I'd compare it to Chipotle. They're a very similar company, but it's just a little different on the cuisine, and they focus a little bit more on bringing healthy, the health aspect into food, in my opinion. So very good company, very good product. I think that's not the issue with this company. We see that their market cap is almost 6 billion, P ratio of 42. I think their forward P is much lower than this after dropping 63%. If we take a look on Market Dash here, if you guys do enjoy the Market Dash platform, be sure to use my link down below, free 7-day trial. We see that pretty much, same thing as Robinhood, but we do see that it actually has a pretty good, comparison. We see the Artal Group owns 75% of their portfolio as Cava, which is very interesting, and then a lot of other major, buyers. But we do see as well that the price targets on this one are a lot of buys. A lot of people are saying buy over the past 6 months. And then we see that the lowest price target is $52, which still has an upside, and the high price target is 284% to the upside for $196. This is an average price target of a 65% gain, which I can very easily see happening for Cava, because this is not, it's not really comparable per se. We see that this is since 2021 or 2022. This is right when they IPO'd. We see right here. This is their revenue chart. It doesn't look like their stock price chart, so which is interesting because usually they're pretty comparable. Usually they're the same thing. We also see that their free cash flow is also doing decent. It's actually positive, so I'm not worried about that at all. But we do look at their revenue, and it's growing very nicely in comparison to their stock price, which is not. I want to take a look at their earnings presentation, which isn't a lot. It's just, one page, which is fine. They give a lot of good information in this because we see that their revenue is up $289 million. That's great. Their net income is 14.7 million. So when you compare that, that's a pretty low margin right there. So their revenue being almost $290 million in one quarter, and that means they're doing over $1 billion a year, which is great. But then their net income is only 14.7 million. So that means they're probably doing like 60 million a year in profit. That's pretty much the restaurant space for you. We see the restaurant level profit margin is 24.6%. They actually have very nice free cash flow. I love to see that. Adjusted EBITDA up 19.6%. And then we see the same restaurant sales growth is 1.9%. Love to see that as well. We see that this is actually a statement that they let out. I'm not going to read all of that. You guys can read that if you'd like. But I do think that Cava has a very good thing going for them, and they do have 17 new Cava restaurant openings, 415 total, which is a lot of restaurants. I think this company still has room to expand. But now that they're kind of, you see 17.9% year-over-year growth in restaurant count. I think that now that Cava's kind of, they're everywhere. They have 415 locations. That's pretty good. I think there's still room for a lot more. But now that they have this many locations, I see them, they're going to start going back up on their trajectory as far as stock price. So can you franchise a Cava? This is an important question because a lot of companies that are not, killing it, you can franchise one of their, brands. You can franchise one of their stores because they want people to pay for it. No, you cannot franchise a Cava restaurant because they are all company owned and do not offer franchise opportunities. That is a telltale sign that a company is doing pretty good. If a company doesn't let you franchise them, then they are doing fine on their own and they do not need your help. they're able to make way more money by, opening it themselves than they are from, someone paying to open it. So that's always a good sign. So I really like to see that. That gives me some hope in the Cava company. And then I also had an article here that I wanted to read about that talks about Cava's group's recent expansion. Is it a shift in value for 2025? So wondering if Cava Group, blah, blah, blah. The stock has been on a roller coaster, dramatic drop to say the least. And then when it comes to valuation of Cava, the group currently scores just 1 out of 6 on our value assessment. This means it is only undervalued in one key area. I don't agree with that. I think Cava is. I wouldn't. Okay, this is what I'm thinking about Cava. Is right now, would I load the boat on Cava? No. I'm not going to go load the boat on Cava. I'm not going to take all my money and then throw it into Cava. I don't think that's a good idea. Am I going to start buying shares? I might. But the thing is, if the market does drop, or if there's any, slight hiccup in Cava, and it gets down to this $30 level range, the $40 level range, like if Cava hits $40, I'm buying a lot of shares, because when these great companies drop, they drop a lot. Especially, when it's this fast, it's always a surprise. We see that they were actually trading for $138 just, how many months ago is that now? Just pretty much, I mean, 9, 10 months ago, they were trading for $138, and now we're talking about a $50 stock. Very big drop right there, but there is reasons to it. We see that their cash flow is not looking amazing. We do see that their profit is pretty low, but that's because they're expanding so much. It makes sense. So we see approach number one, Cava Group discounted cash flow. The discounted cash flow model estimates the company's value, blah, 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 blah. I don't want to read everything of this, but I do think, they go through kind of just how Cava is overvalued and then how they're undervalued. We see that they're actually rating them overvalued in a lot of categories. I don't think their PE ratio is overvalued. I think that's just old. So I don't think that's fair to talk about that. But I do think that Cava is a very good buy right now, just because they are getting very close to that point where you're saying, okay, there's no reason not to buy this company. Because if we look at their PE ratio, actually historically, we can see that their PE ratio has been very high. For it to be 40 is actually really good, because we see at one point it was 583 before the company was profitable. We see that it was looking at something like negative 400. But then they've traded in the hundreds for a long time, because this company was growing so fast. And then you see that this is a common thing that happens, is these great companies grow really fast, and then their growth rate's slow for a little bit, and then they get back on track. So I'd compare this one to Celsius. Celsius, not too hot actually right now either, but this is a stock that I'm invested in, very much believe in. But if we do look at Celsius right here, we can see that in the past 5 years, they have a pretty similar story to Cava. So you have that run up, then you have that drop, and then if you got in during that drop for $22, you're now sitting pretty nice. You have a pretty nice gain on that, and you had an even better gain when this stock was $64. Trust me, I know. But you're still doing all right. You're still making a good amount of money off of it. So I think that Cava is a buy right here. I think that I would wait just a little bit. I'm a big proposer of time in the stock market, not timing the stock market. So would I start a position in this? Yes. If you're kind of a bigger trader and you are thinking about buying a lot of Cava, I think selling puts, this is the optimal position to sell puts. Because you can just, if you're selling puts against the stock, you're able to buy it for a cheaper price, or you just collect that premium. So if you're going to buy it anyways, I think like selling puts at $40 makes a lot of sense for me. I'm not going to buy 100 shares of Cava. I don't think that's something that my portfolio needs. That would be, almost a fourth of my portfolio right there. So do I want that in Cava? Probably not right now. I don't want that held up for $45 either. So that's not what I'm going to do, but that is something that I could see happening. And I do think that this is a pretty attractive buy right here. $40 put for a $45 premium. That's pretty good to me. So that's all I have for today's video, guys. I did just want to make a short video talking about Cava, why I believe in the company, why I think that it's probably a good investment right now. I'm not going to say definitively, because this is not financial advice. It is just my opinion. But thank you guys so much for watching. I hope you did enjoy. I'm not talking about a crazy stock today. This is just one that's dropped a good amount, because I talk a lot about the restaurant space. There's, one restaurant stock in particular that if you guys watch me, it's my favorite. And then I can always compare it to a lot of other restaurants, because there are a lot of successful restaurants. Not to drag the video out, but let's just look at, Texas Roadhouse, for example, is a very successful restaurant that has a stock that reflects the restaurant's success. It's up, 1,489%. Look at Wingstop right here. If we check this stock out, we can see that this one all time is up 780%. And then at one point, it was all the way up 1,285%. Let's just check out one more. If we look at Chipotle not amazing right now, but we do see that even still, at one point, the stock was up at an all-time high, 6,921%. So it was trading for less than $1, then it went all the way to 63. Now it's at 34. Big drop from Chipotle recently. Kind of reminds me of someone else. But these are big companies, and I think Cava really has the potential to, especially Chipotle, they definitely have the potential to compete with them. Chipotle has a $47 billion market cap right now. This was closer to $100 billion not too long ago. Do I see Cava getting there one day? Yes. I'm not sure when, but I do think they will get there. So thank you guys so much for watching. Be sure to smash that like button. Also subscribe to the channel. I'll catch you in the next one. Peace.